Thank you, Mayor Hall, members of council, Nelson Smith, Finance Director. It's my pleasure to provide you with a workshop on fund accounting and governmental budgeting practices. Some of the items I'll be discussing include fund accounting, types of funds, number of funds, the non-departmental budget, transfers in and out, fund balance, encumbrance, and manager carryovers. So what is fund accounting? Fund accounting is a tool for organizing and presenting data about financial resources that highlights the fact that certain resources have been segregated for the purpose of carrying on specific activities or attaining certain objectives in accordance with special regulations, restrictions, or limitations. Some of the components that make up a fund include a set of accounts that are used to compile a balance sheet and an income statement. The balance sheet includes asset accounts, liabilities, and equity accounts. The income statement includes revenues, expenses, other sources, and uses. Some of the categories of funds include governmental, proprietary, and fiduciary. Governmental activities and funds are used to account for activities primarily supported by taxes, grants, or other similar revenue sources. Proprietary or business-type activities are used to account for activities that receive significant support from fees and charges for service, where fiduciary activities and funds are used to account for resources that a government holds as a trustee or agent on behalf of an outside party. Governmental funds include several categories. One is the general fund. We have special revenue funds that include CDBG block grant funds. The federal TRIP earmark funds are in this category, state gas tax, and supplemental law enforcement grants. We have debt service funds for general government and the successor agency debt. We have capital project funds for capital outlay funds, utility surcharge, park development, and transportation development. Some of the proprietary or business-type funds, there are actually two categories. One is for enterprise and the other for internal service. Under enterprise funds, we have wastewater treatment, solid waste, ag and domestic water, municipal airport, and the parking garage. And for internal service funds, we have equipment management and self-insurance. Fiduciary funds include trust accounts and agency funds. Under trust accounts, we have special deposits that would include things like park maintenance districts, general plan maintenance, seized asset trust funds, habitat conservation trust funds, etc. We also have the other post-employment benefit irrevocable trust for the retiree medical program, as we have the Fireman's Disability and Retirement Fund. We have 22 agency funds to account for the special assessment districts and community facility districts we have in Bakersfield. Let's talk a minute about the number of funds. For accounting purposes, we have 80 individual fund account groups where we collect and maintain detailed financial data. For financial reporting, when we present the audited financial statements, we actually take those 80 funds and blend them into 27 fund groups. GASB application often involves the treating of two or more funds used for accounting purposes as a single fund for financial reporting purposes. So let me give you an example. The wastewater treatment fund actually has 3 separate funds. There's a fund for Plant 2 operations, Plant 3 operations, and then the sewer connection fees. When we get to financial reporting on an annual basis, we blend all those funds together, so the one enterprise of wastewater management. Why do we have non-departmental budgets? Well, there are some costs that just don't fit into a specific department, operation group, or a capital project category. In the general fund, some of the non-departmental items include retiree medical costs, accrued leave payouts, property tax administration fees, auditing costs, contributions to other agencies. We might set aside funds for a possible cost of living increase or possible medical cost increase. And then, of course, council contingency funds. So these are all examples of non-departmental items in the general fund. Outside the general fund, We also have retired medical costs, and then debt service payments, including not only the principal and interest due, but other legal or professional services that support the debt service activities, such as continuing disclosure or fiscal agent fees. Next topic, transfers in and out. There are two primary reasons to transfer cash from one fund to another. One is for debt service funding, and the other is for capital project funding. The first example would be HUD funds are transferred from the CDBG fund to the city's debt service fund to pay principal and interest on a Section 108 loan. Another example would be funds are transferred from the hotel tax fund to the capital outlay fund to fund various capital improvement projects. This year, that transfer is primarily for road resurfacing. Example 3, funds are transferred from the primary transportation development fund to a sub-TDF fund to segment the trip project costs from non-trip project costs. Another example would be funds are transferred from the sewer connection fund to the sewer plant number 3 fund to partially cover some of the debt service costs associated with the plant expansion. And the final example would be funds are transferred from the successor agency operating funds to the debt service funds to properly account for and pay the debt service costs of the agency. Next topic is fund balance. So let's talk about what is fund balance, how is it calculated, what causes it to go up or down. Fund balance is the net financial position of a governmental fund. For enterprise funds, fund balance is also called retained earnings, and for enterprise funds, we measure net current assets for budgetary purposes. So how is fund balance calculated? We have current assets minus current liabilities. Current assets being cash, investments, and receivables, and current liabilities being accounts payable, monies held in trust, and deferred revenue, which is cash has been received but not yet earned. What causes fund balance to go up or down? Well, variances of revenues to expenses during the year, and we have transfers in and out of the fund during the year. So for example, the wastewater fund collects operating revenue of $34 million. They have operating expenses of $33 million, so fund balance goes up by $1 million. Example number 2, the refuse fund collects operating revenues of $42 million. They have operating expenses of $43 million, and they have a transfer out of $1 million of cash to the equipment fund to buy some new garbage trucks. In this example, the fund balance goes down by $2 million, $1 million from the operating loss and $1 million from the transfer out. What makes up the general fund balance? At June 30th, 2015, the general fund balance was $40,780,089. It was made up of a cash basis reserve of $12.8 million. There was $19.6 million designated for the new year budget, $6.6 million in reserve for vacation sick payouts. We had $1.2 million reserved for encumbrances, and an undesignated remainder of approximately $384,000. Over the last 8 years, the average general fund balance has been slightly over $51 million. So you can see the $51 million average over the last 8 years. At June 30, 2015, the fund balance was $40 million, and we're estimating at June 30 of 2016 that the fund balance is going to drop down to about $33 million. Encumbrance carryovers are the remaining balances of open purchase orders that are carried forward from one budget year to the next based on remaining contractual balances at each June 30th. And manager carryovers are city manager approved carry forwards of funds budgeted for either grant-related costs or capital projects that have previously been approved by the City Council in either the current or a prior fiscal year. A couple examples of encumbrance carryovers. Example 1, the city's issued a purchase order for the purchase of a fire truck. The order was placed in May of 2016, but the truck won't be delivered until April of 2017. the budgeted funds for the purchase are carried forward into the new fiscal year to pay for the truck upon delivery. Example 2, the city issued a construction contract to reconstruct a section of road. The purchase order was issued to track the progress of the payment on the construction. Completion of the project is not expected until next year. The remaining funds budgeted for the project are carried forward into the new year to pay for the work upon completion. An example of manager carryovers, the police department receives a federal grant to pay for community policing activities. The grant was awarded in fiscal 15-16, but the grant period runs into the next fiscal year. The manager's office authorizes the remaining grant funds to be carried forward into the new fiscal year. And example 2, a capital project budgeted in the current fiscal year. Some preliminary design work has been done, but construction has not been awarded. The manager's office authorizes the funds budgeted for the construction to be carried forward into the new fiscal year. That concludes my presentation.